There you go. Right up your alley. Okay. That's
It is
great.
almost a it's almost a softball, but I'm actually gonna. I usually quote Kenny, and it's funny that Kenny's here, but Kenny many years ago said something that was really impactful, not only for me but everybody that was in the room. And you talked about communication builds trust. That was kind of your tagline. And so when things aren't going well, and there's a capital call or the lenders reaching out to you, that's the time to triple down, quadruple down on your communication with your investors. It's not the time for you to bury your head in the sand and ignore investors. As soon as you start hearing bad news, start communicating that with your investors. Most investors understand, especially if you're dealing with accredited investors, they get it. But the worst thing you could do is just ignore their calls, or if you're not giving distributions, give an explanation. So step one would be to sort of quadruple your level of communication with your investors, not stick your head in the sand. And then obviously from then on, it's part of that communication is like, hey, it looks like we may need some additional capital. And typically clients will put together a conference call, a Zoom call or whatever with the investors, and go through, as we mentioned earlier, the operating agreement, and let them know, hey, here's the procedure for a cash call. The manager has decided that we do need 500,000 or 300,000. There's 30 investors. That means everybody's got to put in $10,000, and you just educate them through the process of what's outlined in the operating agreement, which is going to dictate how this cash call procedure is actually going to go forward. But communication with the investors about that provision and what's going on is going to make your life 1,000 times easier.
Yeah, I've been through this before, guys. And I'm telling you, like, when people invest, they get the PPM, they get the business plan. But a lot of times, they're overwhelming. Those documents can be overwhelming for people. And so you might be all buttoned up and correct on, on the documentation side. I'm not suggesting that you aren't. But if something's going on, then you better be putting that in writing and letting people know. It's really, really, really important that like we already put a letter out on rate caps that are expiring in 2024. So as our company, and we're already looking at all of those. We don't know what rates are going to be. We don't know what cap rates are going to be. We don't know any of that. But that's how far out we are, and you should be doing the same thing. It's communication's key, also that is what your job is. Your job is to manage that asset and manage that investment, and have a plan. And things don't always go the way you think they're going to go in the business plan. And that is what the quarterly investor reports are for, in my opinion. They're not fluff. They have to be, have some teeth in them, right?
Yeah, 100%. And I mean that I know that piece of advice was so valuable, not only to me but a lot of my clients, that when these issues happen, they're just double down on the communication. And I love the fact that you're doing it early. I mean, as soon as that first potential bad news comes in, let the investors know, so it's not a huge surprise. Oh wait, we've missed distributions for 2 months in a row. I wonder what's going on. They should know that way ahead of time, that something's going on. Cash flow is getting a little tight. Lenders breathing down my neck. Whatever's going on, the market's shifting. My rates, my bridge loans expiring. All that stuff. The minute you hear about it, put that in the quarterly report, and then I think, again, it's not even quarterly reports at that point. It might be monthly calls, or even weekly, just or as needed if the situation warrants it.